વધુ વાતચીત કરીએ સિગ્નેટી ટેકના CFO कृष्णन वेंकटाचार्य अपनी साथ जोड़ाई रहा है। सर जी, गुड आफ्टरनून। सबसे पहले बहुत बहुत स्वागत है आपका CNBC बाजार पर। एंड लुकिंग एट द नंबर्स, इट इज़ वेरी इंटरेस्टिंग। सो शुरुआत यहीं से करते हैं। ओवरऑल कैसे देख रहे हैं सर आप नंबर्स, और क्या हाईलाइट्स रहे सर इस बार?
Good afternoon, and thank you for hosting us today. The quarter has been fantastic. We have achieved the desired results for what we have invested the time and money over the last 24 months. The way we have performed sequentially comparing to last quarter to this quarter at about 9.8% growth in revenue and the profitability. I think the transformation what we did during the pandemic is paving way, and we are confident that we'll be moving ahead. And the year ahead looks, though we are not in the process of giving any guidance, I think the year ahead looks very, very bright in terms of similar set of positivity in terms of the numbers running through, comparing the order book and other positions what we are. During the year, I think I'm looking at a digital company, Apara Digital Co. acquired here in terms of specialization. And that will also booster the confidence for us that we'll be able to cross-sell and upsell the digital services business. While the current contribution of the revenue in the quarter is at about 32% from the digital services, we are hoping that this will really ramp up in the coming quarters as we have started cross-selling and upselling the services, digital services to the existing clients, and especially the top 70 clients.
Okay, now Christian sir, I would like to understand is that you are catering very vast number of industries and so many sectors. What is the take on inflation from your clients? How are they looking at the industry and looking at inflation right now? And what do you think, what kind of mindset they are? I mean, they are ready to spend more money on technology and softwares. How do you see it?
It's a good question. The spending on critical applications continues to be, and one classic example in terms of what proves to be right is basically we have won orders from about 13 clients, new clients, which we have signed up during April, May, June. The orders worth about $65 million is what we have signed up, which shows very clearly that on critical applications, the spending continues clearly. And though consolidation takes place in terms of the recession setting in invariably, but I think we are in a position where we are trying to give a value-added services to the client. So invariably, we are not seeing an aberration which could be a couple of percentage this way, that way in terms of the routine structure of the revenue. But I don't see any kind of a issue, because we are accelerating our growth with various other newer set of technological offerings which are essential and critical for the clients. So we are not, we feel that probably the spending is happening very clearly on all mission critical applications where we are in about 70% of the clients. So invariably, we don't see that as an issue.
Okay, sir. Let's discuss about margins. Overall, ideal IT companies are not performing well in terms of margins. Let's discuss that. So you are performing really well, and your margin growth is also there. Whether we speak about quarter on quarter or year on year. So how are we managing them, the margins particularly, and what kind of trend line, if you want to discuss that also, sir?
Yeah, I mean, we have adopted a strategy which was very simple, that being in the mid-cap size very clearly, that we picked up the revenues based on our focus to come back, and we did a last year growth compared to the previous year at about 38% in the top line growth. What was necessitated, and we saw about 37% of attrition dropping down to about 31%. That was necessitated with a cost increase, which we have to do one time in November and then again in April very clearly. And we know for sure that these strategies will pay us off clearly in terms of trying to retain the resource as against trying to get them into replacement. So that is one of the reasons temporarily we took over 2 quarters in the last year, a blip in the margin, and we know that this will bounce back, coupled with one-time expenses not getting repeated out, which had its own share of negative contribution. So as it stands today, we are pretty confident in terms of, as I told you, that when we are trying to mix our offerings in terms of trying to get through the digital as a portion and trying to do the automation services, which are in specialized nature when you're trying to look at it, I think the margins, what we see is that more stabilized at these levels and then slightly moving up the value chain in terms of the margins. And we hope to get back to 14% margins at a EBITDA level in the coming quarters as we start progressing very clearly. We have laid out our plan. One, we have done, we are transforming these contracts in terms of wherever it is as a what you call identified job placements being transferred into a complete managed services. We're trying to move into an outcome-based services. We're also trying to cross-sell and upsell value-added services. So with these, one, the rate realization, the rate revisions, wherever is possible because of the stickiness at which we have with the client. And the third portion is that we are trying to continuously bring in a pyramid change, and we have started adopting the culture of trying to get through this year in terms of a lot of freshers into the bucket. So I think with these, probably, I'm not trying to boast in terms of that the margins is going to be north of 16 or something. I'm just talking very clearly that we'd like to stabilize this at about 14% and start moving up, because we have galloped in the journey in terms of trying to accelerate the revenue potential, lay a foundation, and then start mining these clients and become where we have a lesser number of clients contributing to a major share of the revenue. So that is the strategy. And it's working for what we have worked over the last 6 quarters. We could see that we know for sure that last quarter was the worst quarter for the company, and we have turned around and the influx has moved up, and we are going to be on the higher margin trajectory moving forward.